when being right still makes you lose. You ever had one of those trades where you called it perfectly? You marked the level, you knew the bias, price even did exactly what you said it would, and yet you still lost money. You sit there, staring at the screen like, wait, how did I lose when I was right? Welcome to one of the deepest psychological traps in trading, the illusion of being right. Because in the market, being right doesn't mean making money. It means being aligned with timing, structure, and execution. And that's where most traders fall apart. They analyze perfectly, but execute emotionally. It's like predicting rain, carrying an umbrella, then stepping outside 5 minutes too early and still getting soaked. The market doesn't pay for your analysis, it pays for your discipline. It doesn't care that you are almost right. It rewards those who can wait until right becomes ready. Picture this. You see your bias clear as day. You mark the demand zone, price dips in, you jump in with full confidence. This is it. Then price just keeps dipping. Your stop gets hit, you sigh, walk away, and 10 minutes later, boom, price rockets right where you predicted. You're sitting there whispering, I knew it. And that whisper quickly turns into a scream, I was right. But in trading, I was right means nothing without I was in at the right time. See, the real mind trap isn't losing when you're wrong. It's losing when you're right. Because that kind of loss hits deeper. It's not just money. It's ego. It's belief. It's confidence. You start questioning everything. Your system, your plan, yourself. And slowly, doubt starts whispering. Maybe I just don't have what it takes. But that's not true. You're not broken. You're just trapped in a cycle that every real trader faces. Because what you're battling isn't the market. It's your timing psychology. You're fighting between what you see and what you feel. And sometimes your feelings trade faster than your plan. You see the setup forming, but fear says, what if it reverses? You hesitate. Then you enter late. Then you move your stop to give it room. Then you close early because you want to protect profit. And finally, you watch it hit your original target without you. That's the trader's mind trap. You weren't wrong. You were early, impatient, or emotionally attached. And every time this happens, you lose trust in yourself. Not because your analysis was bad, but because your execution wasn't aligned with your logic. And this mismatch between being right and trading right is what keeps good traders stuck in the loop of frustration. Because the truth is, trading isn't just about knowing direction, it's about knowing yourself. Part 2. The Trap of Being Right. Here's the strange part about trading. You can be right about direction and still lose money. You saw it coming. You marked the level. You waited for that perfect confirmation candle. And when it finally moved, it tagged your stop loss, then flew exactly the way you predicted. That moment, it's almost personal, isn't it? You stare at the chart like it just betrayed you. You start thinking, was the market hunting me? Why does this always happen to me? But the truth is, you didn't lose because you were wrong. You lost because your timing, your emotion, and your identity got tangled together. Most traders want to be right, not to trade well. They want to prove something. They want validation that their analysis was perfect, that they're smart enough to beat the market. It's that little inner voice saying, "Ha, I told you it would go up." Yeah, right after it took your stop and your confidence with it. But here's the real wisdom. Trading doesn't reward who's right. It rewards who's disciplined enough to survive being wrong. Every single trade tests a piece of you. Your patience, your ego, your control. And if your need to be right is stronger than your ability to stay calm, you'll always lose, even when your analysis was perfect. See, the market isn't here to validate your ideas. It's here to expose your weaknesses. If you enter too early, it'll teach you timing. If you move your stop, it'll teach you pain. If you over-leverage, it'll teach you humility. The charts aren't against you. They're your mirror. Every mistake you make, every emotional reaction, every broken rule is simply your reflection on the screen. And the faster you accept that trading isn't about being right, but responding right, the faster you'll step out of the emotional prison most traders never escape. When you stop caring about proving you're right, you start focusing on executing with peace. You begin to trade like a professional, detached, aware, and calm, because you finally understand the market doesn't owe you a win, but it will always give you feedback. Sometimes that feedback just sounds like, hey, maybe don't revenge trade at 2 a.m. again, buddy. The moment you stop seeing losing trades as failure and start seeing them as feedback, your whole trading psychology shifts. You stop bleeding emotionally. You stop fighting the chart. You start listening to it. And that's when growth happens. Not when you get every trade right, but when you respond right after every trade. And hey, if you're struggling with trading psychology, if you find yourself making new plans every month but still fighting the same emotions, I'm here to assist you. Just subscribe, join my channel, and jump into our free Telegram group. It's a space where we talk psychology, stress, and accountability. We review journals, check who violated their rules, and support each other like a real trading family. You don't have to face the charts alone. Let's grow together, one disciplined trade at a time.
Part 3. The psychology of timing, ego, and control bias. Let's talk about the silent killer in trading, timing. You can predict direction. You can read liquidity zones like a pro. But if your timing is even slightly off, the market will make you feel like you were never right in the first place. You know that feeling? You enter the trade, watch it go a few pips in your favor, you smile, and then suddenly, bam! A wicked spike kicks you out, only for price to shoot exactly where you expected. It's like the market whispered, good analysis, bad timing. That's when frustration kicks in. Not because you were wrong, but because you were almost right. And almost right in trading hurts more than being completely wrong. Because almost right tricks your ego. It whispers, if I just held a little longer, if I just entered a bit earlier, if I just added one more confirmation. But here's the thing. The market doesn't pay if-only traders. It pays patient executors. Timing isn't about predicting the candle. It's about reading the context. It's about understanding that your bias can be right, but your execution can still be wrong. You can see the right setup, but enter emotionally or exit emotionally, and that emotion becomes your invisible tax. Because let's be honest, how many times have you said, I'll just enter a bit early before the move starts, and then the move starts just in the opposite direction? That's the ego at work, the need to control every tick, to be the one who caught it first. But the market isn't impressed by early entries. It rewards disciplined entries. It rewards those who can wait, not those who predict. Every successful trader learns this truth. You don't need to catch the whole move. You just need to catch your part of it. The market will always move before or after you, but if you're consistent in your rules, it doesn't matter. Now let's talk about control, because that's where most traders get trapped. The market gives you zero control. You can't control when it moves. You can't control how far it moves. You can't even control if your setup will play out today or next week. The only thing you can control is you. Your reaction, your risk, your patience, your exit. But when you try to control outcomes instead of behavior, you start moving stops, chasing candles, and convincing yourself this time is different. That's when trading stops being a skill and starts being emotional gambling. It's like trying to tell the ocean when to make waves. You can't. You just learn to surf them. Your ego wants to prove it's smarter than the market. Your mind wants control. But your discipline, that's what keeps you profitable. Every losing streak you've had wasn't because the market changed, it's because your state of mind did. When you stop trying to control the market, you start flowing with it. You stop chasing setups. You start waiting for your setup. That's when trading becomes peaceful again. Not a fight, not chaos, just rhythm. You start saying things like, if it hits, and you actually mean it. That's emotional maturity in trading. The calm confidence of a trader who's no longer obsessed with being right, but focused on doing right. Because remember, it's not the chart that tests you, it's your own reflection in it. Once you master that, you'll stop losing even when you're right, because you'll finally understand what the market's been teaching you all along. Consistency beats correctness. Always. Part 4. Breaking the cycle. How to rewire the trader's mind. Let's face it. We've all made that promise after a painful loss. I'll never do that again. We mean it in the moment, until the next setup looks too good to miss. Then it happens again. You break your rule. You move your stop. You revenge trade. And you call it making back what I lost. Yeah, we've all been there. But this isn't about discipline alone. It's about rewiring your mind. Because your brain doesn't listen to promises. It listens to patterns. If your pattern is reacting emotionally, no amount of motivational quotes will fix that. You have to retrain how you think under pressure. Here's how pros do it. Step 1. Pause before reaction. When your heart rate spikes, your mind wants to act fast. So, do the opposite. Slow down. Create distance between thought and action. That's where control lives. Step 2. Journal the emotion, not the trade. Everyone writes about entries and exits, but few record what they felt. That's where the real edge is. Seeing how your feelings influence your trades. Step 3. Reward discipline, not results. If you followed your plan but lost, celebrate it. Because you just proved you can trade without ego. And that, right there, is how consistency begins. Not by winning more, but by breaking the emotional loop that keeps you reacting. Because if you don't break that loop, you'll keep making new plans every month, thinking the next version of your strategy will save you. But the truth is, you don't need a new plan. You need a new relationship with your plan. Stop changing it. Start honoring it. Make your trading rules sacred. Because once your process becomes your anchor, you'll stop drifting with every losing streak. You'll stop doubting your identity as a trader. You'll start trusting yourself again. Remember, trading is not a test of prediction. It's a test of self-control. Every loss is data. Every emotion is feedback. Every day is training. You're not here to be perfect. You're here to evolve. The market will test you. It will expose your impatience, your greed, your ego. But it will also reveal your growth, if you're willing to listen. Because honestly, the market has been your greatest mentor all along, just with really expensive lessons. So, from this day forward, stop chasing perfection. Start chasing awareness. Stop saying, I need to be right, and start saying, I need to stay disciplined. Because the moment you shift from needing to win to needing to execute well, that's when everything changes. The market stops feeling like a battlefield and starts feeling like a mirror. And the trader looking back at you is calm, confident, and consistent. That's when you've finally broken the cycle. That's when trading becomes peace. So, if you're struggling with your trading psychology, if you keep restarting every month, making new plans, but ending in the same emotional place, I'm here to help you. Subscribe to this channel and join my free Telegram group, where traders like us talk openly, keep each other accountable, and share the truth behind trading psychology. You don't have to do this alone. We'll grow together. One rule, one trade, one mindset shift at a time. The market doesn't test your knowledge. It tests your character. See you inside the Telegram. And remember, being right feeds your ego. Being disciplined feeds your future. Until next time, trade smart, stay calm, and keep evolving.